Thank you for having me.
Thank you for having me as well.
Yeah, thank you, Patrick and Chen Xiao, to be with us on this fireside chat, right? So I think, starting from Money2020, actually, yesterday, we've already talking about, these cross-border transactions, which the way money moves are right now changing very quickly, right? Previously, more from Web2 perspective. Right now, it is going to, Web2, Web3 across all the ecosystem, right? So I think, this is a very important topic we need to discuss, and we have our views and alignment on how we actually bridging these Web2 and Web3, these ML controls, to tackle with the recent trends in cross-border payment transactions. Right? So I think you both actually are very experienced in your industry, right? Before we actually start with a deep dive, I want to have first from all of you, both of you, what's your views on these Web2, Web3, the transactions, and also the recent trends, and specifically how your expertise area, your company can help with us to bridge these Web2 and Web3. Patrick, you want to first?
Yeah, sure, I can kick us off. So I think it's very clear, and particularly here in a place like Money2020, you're seeing a lot of evolution in the payment space. A significant uptick in the rise of instant payments and the ability to complete cross-border transactions through various types of rails, government-run initiatives, QR-based, wallet-based payments, and of course the rise of stablecoins. And so with that, you're seeing a significant rise in value transfers taking place in a Web3 environment. And of course, what ultimately comes about as a challenge is you're still tethered to those fiat-based rails and those institutions. Within these as well, there's a very different approach to compliance. So I represent LexisNexis Risk Solutions, and in particular our financial crime compliance division, which really much focuses around that sanctions, AML, and customer due diligence space. And one thing that's very clear is that the industry for some time has been building out like-for-like approaches on the crypto side, and to replicate those KYC and AML controls that you see in traditional finance. But naturally, they're different. There's different infrastructure, right? There's different challenges. In the TradFi world, you can typically only see within your institution, but you have a deep, KYC, identity-based framework to carry out, know your customer, know your business type processes. But you don't have the visibility of how those individuals and businesses are acting beyond your institution. On the crypto side, you've actually got the opposite problem. You have hyper-transparency. There's a very clear path of how value has been transferred along the chain between wallets, between different cryptocurrencies. However, you've got pseudo-anonymity. And so you have the challenge of the hyper-visibility, but then tying it back to real-world entities, which that traditional finance and traditional approach to compliance can help with. And you're still, for the most part, going to see the importance of tying together fiat-based payments and activity, the on-ramps and off-ramps, and then marrying that up with the on-chain activity to establish where those risks might lie, whether it be scams, money laundering, or hopefully legitimate transactions.
Thank you, Patrick. Chen Xiao?
Yeah, so I think the experiences in the FI world that we normally deal with, it's echoes the same as what Patrick has said. Recently, there's a lot of focus into scams, frauds, cases, especially because of how the anonymity of the Web 3.0 crypto market is about. So what Moody's does is to actually enable our clients to have those data to verify against the identities. But these are traditional kind of data sets that enable you to identify corporates and also the individuals behind those corporates. But on a Web 3.0 kind of view, you're then working out on addresses, on wallets, and who they belong to. That's a layer that normally banks don't have visibility on, right? So that's the case that we see in a lot of banks right now who are investing a lot into data and also capabilities like the Web 2.0 to match the Web 3.0 kind of compliance and AML kind of use cases. Combining those two together is a very big challenge, and to do it at a scalable manner is something I think is a problem that we need to solve within the industry.
Thank you. Okay. I think, this is the flow chart actually representing the current transaction flow, right? So that never there is a pure Web3 or pure Web2 flow. This is starting from the crypto, then conversion, and then the fiat, right? So I think, we chose LexisNexis as our official partner to work with us to develop this Vision X risk intelligence system, which I think your expertise area is to help with us to, monitor the end-to-end flow for these, the Web 2.5 transactions, right? I just want to understand from LexisNexis perspective, right? Because you are more expertise in the traditional Web 2 part, right? Starting with us, actually, you are transition from Web 2, pure Web 2 to like a Web 2.5. Any capabilities or any, these end-to-end flows you think, LexisNexis can provide with us a better solution?
Yeah, sure. So a large part of the LexisNexis Risk Solutions business is around cultivating and updating and disseminating a view of global risk intelligence. So we have very large teams that aggregate sanctions exposures, look at the many different enforcement bodies around the world, look at the entities listed on those, and then their associated entities as well. And then, of course, other AML concepts like political exposures, state-owned entities, and of course adverse media. So by structuring together these types of risks and linkages, that provides the foundation to then analyze payments, accounts, trade flows, and any type of activity where there's a registered name or identity. We can then identify where those risks sit and then allow our customers to evaluate their risk and either offboard them or manage that risk within their institution. Where the opportunity really lies, particularly for VASPs, PSPs, and financial institutions that are increasingly adopting or supporting the cryptocurrency ecosystem or blockchain in general, is to marry together that real-world intelligence with on-chain activity, and there's different identifiers that you look for within that. So, for example, traditionally on a SWIFT network, you might look at the various correspondent banks that are being used. You might look at where payments are coming from or to assess that type of risk of jurisdiction. In the crypto world, you don't necessarily have all that information listed out, but you do have the digital behavior. You have the trails, of course, on the blockchain as well. And some of those sanctions exposures that you look for, some of those risks around terrorist financing, around money laundering, and of course around scams increasingly, as the crypto nexus is so great within scams, is held within the blockchain, and the analytics that can be derived from the behavior that takes place on that blockchain. But then the all-important part to overcome that pseudo-anonymity is to then bring that back into real-world identities, and that's where that traditional KYC approach is very important, and marrying those two together of the Web 2 and the Web 3 worlds to emphasize robust compliance.
Thank you. So I think this is actually the pain points and also the challenges we are facing right now, right? So Web 2 world, actually all the data in the Web 2 world, you have the KYC, KYD data, KYB data, client profile. And also these controls with past decades we have built in the Web 2 traditional industry, it's very, very strong already, right? But the problem right now we are facing, like we discussed this morning, actually these indirect exposure specifically, like outside of the ecosystem, actually this is invisible to us, right? And then the Web 3 part, actually it is totally the opposite, right? Web 3 part, actually everything on-chain, this is transparent, right? As long as you have the wallet address, you can see every transaction, right? Nobody can hide anything. But the problem right now we're facing specifically when we implement these travel rules, right? The wallets, who are behind these wallets, who are the owners of these wallets, actually this is not transparent, this is anonymous, right? So from us, our perspective, Web 2 world, this is named but opaque. And also Web 3, this is anonymous but transparent. Right, so these two ecosystems right now are working in silos, right? So we are trying to bridge these Web 2 and Web 3 data. The first thing is the identity layer. I think this is very important. We can connect the dots, right? So from Moody's perspective, that's your expertise area to help with us to validate, these KYC, KYB information. And I want to hear from you, how your capability actually can help with us and what's your view on this, Web2, Web3 bridging from identity layer perspective?
Right, so I think that's a very important point to make, right? The traditional problems of AML, fin crime that deals with these transactions are always a problem or to solve, right? So that is a traditional kind of like network on a Web 2.0 kind of scale. So when we say that named and opaque, we also then need to find out not just the companies that are behind, but the individuals that's behind those companies. And that's where we come in to provide the kind of data at a scalable manner to very quickly identify for these entities and organizations who are behind and who are the people at the end level of the shareholding perspective. So that helps you to identify the people behind, right? To truly know whether this is all within a organized crime group for scams or perhaps cross-border financial crime activities. Those are the data that we can provide, but I think on Web 3.0, the key issue is where do you even start when you don't know who are the organizations or individuals behind the wallet addresses. That's a key aspect that a lot of organizations had to deal with, right? With this, you have an added layer of anonymity which you need to resolve before you even get to identify using our data. So that is why I think it's key that we have a combination of different tools within one platform to then marry these two together, have it within the same ecosystem to identify different threats on different channels using the topologies that we see today. Yeah.
Okay, thank you. So I think, for all the discussion we have so far, we've already very clear and aligned that, these Web 2.5 concept and monitor the compliance AML from a Web 2.5 perspective is really, really important right now to tackle with, the current transaction patterns, right? And then for our Vision X with the support from, LexisNexis and all the vendors, we've already developed and closed the gaps. So this is what we are having right now. The first one is all of the intelligence, whatever the identity layer, the transaction network counterparties, we've already integrated with the Web 2.5 data, right? The second one, we also have the multi-source KYT engine. Everything, all these capabilities we are right now having. But the question I want to have your views is, for this Web 2.5, this is only what we are doing right now. But from my perspective, I think the whole industry, we should promote this Web 2.5 concept, specifically from AML CFT perspective, because this is not only just one company work, this should be an industry practice, right? And then, what do we think of this? And once we have this Web 2.5 AML control framework, which we can expand to more, the industry, what it can help with us to build up and to control properly.
Yeah, so ultimately it is an ecosystem-wide approach that's required. You still have the constraint around what you can do within one institution. Of course, blockchain provides a significant amount of intelligence that can inform you around the money laundering risk, the terrorism financing risk, the risk of scams as well, and not receiving and processing these funds through your institutions. But a global challenge in this area is, of course, the effective adoption of the travel rule, because you don't, by nature of cryptocurrency, have this information available. Underpinning that, you need strong KYC, strong KYB, you need robust verification controls all across the ecosystem and PSBs, VAPs, and traditional financial institutions as well, for this type of information to be very useful for those types of risk and compliance techniques. What we've noticed in the years as cryptocurrency has risen in prominence and mainstream adoption is a more siloed approach between these two worlds. The unique requirements as they've been built up on the Web3 side of things have iterated and developed somewhat independently of the traditional controls that you see in the traditional financial institutions and the KYC and AML controls there, which are different in nature. So the fact that they've kind of developed independently but in parallel, now the industry transition that needs to take place is to converge those approaches and be able to better leverage the intelligence that can be collected and investigated and, to drive detection and effective reporting across both those ecosystems. And that starts with operationally bringing together teams and systems such that you can detect this properly, because like your example that you gave earlier, you might have certain risk flags that are identifiable on the blockchain, but you can't tie them into the real world implications until you can look at the the business structures, or you can look at the individuals who are acting behind those wallets, and then orchestrating multiple hops to then launder funds or process scam funds. And institutions, you don't want to be unwittingly supporting that type of activity, and the only way really is to bring together those on-chain and off-chain approaches to compliance.
So in my experience, I think what we see that we work with both the traditional banks and FIs, and also we are working with fintech providers like yourself, right? So from both sides of the stories, it's now becoming a mesh of network. No longer are banks just thinking about fiat currencies, FX, and all that kind of traditional banking solutions. They are actually moving on into exploring the cryptocurrency kind of space when it comes to transactions. So that's where I think traditional and the knowledge base that's been built up for AML, FinCrime, typologies, and all that are very strong within the FI industry. But now you added a layer of complexity with the 3.0 and cryptocurrency transactions, which then introduces different kind of difficulties, which have been developing through the years, and as what Patrick has said, in silos. There's a lot of things that we can share in between those fields to combine those knowledge to kind of find out what are the typologies that are spreading across. Because criminals are not just looking at traditional banking transactions, they are looking at crypto for sure, right? So a mixture of both will be necessary, and that's where I think the expertise and data needs to come in from all around as an ecosystem, rather than just a jurisdiction or single country expertise. So fintech players like yourself are very important in this ecosystem. We need to encourage more of this Web 2.0 kind of approach. I think that's very refreshing, and it's something that we really need to push as an industry so that we can try to have responsible financing and transactions that's safe for everybody.
Yeah, I think this is a very good discussion. So from our perspective, the motivation actually to build up these Web 2.5 risk intelligence system is just to close the gap between the Web 2 and Web 3 when they are running in silo right now, right? Because when we review these real-time transactions, we notice that some of the clients, if we review from the Web 2 perspective, they seem very clean, right? But when you review also the Web 3 perspective, it doesn't mean the Web 3 is safe transaction. It is also safe in the Web 2. We need to have a consistent and also end-to-end risk view. So across all these wallets, transactions, and bank accounts to help with the compliance team to get a holistic view about the end-to-end transactions, right? That's, I think, what Web 2.5, these AML controls we're promoting right now, right? And also, like I said, this is every company in the industry, we should promote, them to have these Web 2.5 concept and trying to utilize these kind of the tools to help with them to monitor on daily basis, right? Thank you for all the discussion so far. I think, the last question may be for all of us to predict, right? Today in Money2020, we actually discussed about the Web 2.5, and also MetaComp, we are the first one to launch this Web 2.5 system already, right? So what do you think of, maybe next year when we meet again in the Money2020, what will be changed in the industry when we have more and more companies actually to working on this Web 2.5?
I would say one of the big drivers for that is the use of stablecoins as well, to connect these two worlds. And you're seeing increasingly a lot of these cross-border approaches to value transfer being underpinned by stablecoin technology and various types of crosses with fiat backing. So I think there'll be a huge driver in an industry-wide adoption of the type of approach that MetaComp has taken here with VisionX 2.5 more widely. I think that will drive better adoption, better industry acceptance as well for crypto and the Web3 space in general. So therefore, institutional, traditional finance adoption and exploration of these types of use cases will become only more prevalent. And I'd say with that as well, you'll also see downstream benefits of better quality data, richer and deeper identification and verification, and the distribution of this type of intelligence through better adoption of the travel rule, as well as industry and private-public partnerships that can help to support that type of intelligence sharing in the industry.
Thank you.
So for me, I think the Web 2.0 kind of conversation and framework is very important and something that the ecosystem needs to build up on. So hopefully in the year to come, in next year's Money2020, everyone will be talking about how they fit into this 2.0 kind of a framework. And then hopefully we will see a bigger booth with more people coming to this event. And I'll be happy to be here again as well. Thank you so much.
Thank you.